Welcome to another episode of Get Rich Slowly. Today we're diving into the future projections for IREN Limited, a company that's been making waves in the intersection of renewable energy, Bitcoin mining, and the explosive growth of AI cloud services. If you're into tech-driven investments or just curious about how sustainable data centers could shape tomorrow's economy, stick around. We'll break down the numbers, the opportunities, and the risks, because true wealth comes from understanding both sides. Let's start with a quick primer on what IREN actually is, because context matters when we're projecting ahead. IREN, formerly known as Iris Energy, is a vertically integrated data center operator. They build, own, and run facilities powered entirely by renewable energy sources. Think hydroelectric, solar, and wind, often backed by renewable energy certificates to ensure it's truly green. What sets them apart? They're not just any data centers. These are high-density powerhouses designed for energy-hungry applications like cryptocurrency mining and increasingly artificial intelligence workloads. Founded in 2018 and going public in late 2021, IREN started as a Bitcoin miner, but has smartly pivoted toward AI as the sector boomed. As of early November 2025, they're operating across 5 locations in North America, with a whopping 2.91 gigawatts of secured power capacity and another 750 megawatts under contract. That's enough juice to light up small cities, but here it's fueling the digital future. Why does this matter for projections? The world is starving for compute power. AI models like the ones powering chatbots, image generators, and autonomous systems require massive amounts of processing. Think GPUs from NVIDIA running non-stop. At the same time, Bitcoin mining, while volatile, provides a reliable baseline revenue stream. IREN's renewable focus gives them an edge. Lower carbon footprints mean easier access to power grids strained by green regulations, and it appeals to ESG conscious investors. Their IREN cloud service is essentially renting out this infrastructure to AI firms with 24/7 support and end-to-end control. It's like Airbnb for supercomputers, but sustainable. Now, on to the meat. What do the projections look like? Let's talk revenue first, because that's the lifeblood. In fiscal year 2025, which just wrapped up, IREN reported revenues of about $501 million and turned profitable for the first time, with a net income of $86.9 million. That's a huge leap from prior years of losses as they scaled up. Looking ahead to 2026, analysts are buzzing. The company itself has guided for AI cloud revenue to multiply 8 to 10 times by December 2025 from earlier levels, and they've already doubled their GPU supply in recent months. By September 2025, they had 23,000 GPUs either operating or in deployment, with capacity to triple that quickly. That translates to over $500 million in annual recurring revenue from AI cloud services alone. By early 2026, deals for nearly half that capacity are already locked in with multi-year contracts. Zoom out further. Wall Street forecasts point to revenues more than doubling by the end of 2026, potentially hitting $870 million by fiscal 2027. Adjusted EBITDA could surge to $785 million in that time frame, driven by high-margin AI services. Earnings per share estimates for 2026 average around 0.65 to 0.70, up from 0.18 this year. This isn't pie in the sky. It's based on secured power contracts and NVIDIA partnerships, including preferred partner status for their Blackwell GPUs. IREN's co-CEO Dan Roberts recently said on CNBC, "We can't meet the demand fast enough," highlighting how they're deploying thousands more GPUs in the coming months, and with only about 2% of their power currently dedicated to AI generating $500 million in revenue, the upside is massive if they scale efficiently. Stock price projections? They're all over the map, which is typical for a high-growth play like this, but the consensus leans bullish. As of early November 2025, IREN trades around $60 to $67 per share, up over 370% year-to-date. 12-month analyst targets average $55 to $65, with highs reaching $100 to $142 from firms like Cantor Fitzgerald and B. Riley, who recently hiked their targets after GPU announcements. Longer term, some models see $80 by end 2025, climbing to $26 by 2030, and even $118 by 2035, 2050, if AI demand sustains. Out of 16 analysts covering it, 10 rate it a buy, 2 hold, and 1 sell. Overall strong buy, with an 8.8 out of 10 score. BTIG just bumped their target to $75, citing the AI ramp-up. But here's where get rich slowly shines. We don't just chase the upside. Let's talk risks, because no projection is ironclad. First, execution. IREN's aggressive expansion, pouring billions into GPUs and data centers, relies on flawless deployment. Delays in energizing new sites like their Horizon 1 AI facility could dent short-term results. Their Q3 2025 earnings drop November 6th, and any hiccups there might spook the market. Second, Bitcoin volatility. While AI is the growth engine, mining still contributes about 80% of current revenue, and crypto halvings or price crashes could squeeze margins. Third, competition and costs. Power contracts need renewal. If rates spike or supply chains for chips falter amid global tensions, economics worsen. Inflation, dilution from equity raises, and even proposed Canadian power rules could add headwinds. One analyst noted a potential EPS drop from higher depreciation on those pricey GPUs geopolitics plays in too. With 71% of CEOs in KPMG's 2025 outlook prioritizing AI investments and expecting ROI in 1 to 3 years, demand is there, but supply tightness for power and chips could lead to bottlenecks. IREN's renewable edge helps, but if grids prioritize other users, growth slows, and let's be real, this stock's parabolic run, 77% in September alone, invites pullbacks. Short-term forecasts show possible dips to $58, with 3-month upside to $194 in optimistic scenarios, but volatility is the name of the game. So, how does this fit a slow wealth strategy? IREN isn't a set-it-and-forget-it dividend play, it's a growth bet on 2 megatrends: AI and clean energy. If you're building a portfolio, consider it as 5 to 10% allocation in a diversified tech basket. Pair it with stabler names like Nvidia or renewables like NextEra. Dollar cost average in over months, not days, to smooth volatility. Track metrics like GPU utilization rates and contract backlogs. They're better gauges than daily prices. And remember Warren Buffett's wisdom: the stock market is a device for transferring money from the impatient to the patient. Projections show tailwinds, but patience turns potential into profit. Wrapping up, IREN's future looks electric, pun intended, with AI cloud revenue potentially eclipsing mining and stock targets implying 20 to 50% upside in the next year. But it's not without storms. Execution risks and market swings demand vigilance. Do your due diligence, consult a financial advisor, and invest only what you can afford to hold through dips. That's how we get rich slowly. Steady, informed, and unhurried. Thanks for joining me today. If this sparked your interest, hit subscribe on YouTube, drop a like, and share with a friend chasing real wealth. Next time we'll explore compounding in undervalued sectors. Until then, keep building, keep learning, and remember, slow and steady wins the race. See you soon.